Hi traders, it's Zoran Kresovic here, head of sales at Eightcap, and welcome to another week of Trade Zone. So it's been a quite eventful week last week. Let's just quickly recap on that and then perhaps push through the actual economic calendar for this week and also go through the actual charts itself. So quite a busy week on economic front last week. Obviously, the key headline for the last week was actually Bank of England. I did touch on that on last Monday and last Wednesday. We were expecting 25 basis point interest rate rise from the Bank of England. Obviously, market actually to somewhat surprised on the upside, and it was actually a punchy 50 basis points. So full 50 basis points, obviously taking the terminal rate to 5%. And nevertheless, obviously, comments around that are just as important because it looks like inflation is running quite hot in UK, in Europe, all across the globe, in fact. But because Bank of England was actually kind of lagging behind in terms of lifting the rates, we could expect another 1 full percent. Obviously, on the back of that, because of such reasons, pound actually initially shot up, but to some surprise, it actually reversed and actually went to the downside. The primary headline behind that was obviously market is actually pricing in more interest rate rises, and therefore, pound would like to see that occur before it actually continues to appreciate. I'll go through the charts in a moment on that. So that was the big headline. Also, Fed. Jerome Powell actually testifying on Thursday and Friday. There was another interesting one as well. We've seen equity markets get absolutely smashed at the end of last week. That was purely because of the fact, obviously, there was a bit of a divergence where markets were actually running quite hot in Australia, Europe, and in terms of the US equities as well. Everything was going quite strongly upwards. And initially what happened was, there was that divergence where market was actually, or equity markets were kind of expecting maybe there won't be 50 basis point interest rate rise from Fed. Maybe there won't be 50 basis from RBA as well. But comments by Fed Jerome Powell and RBA minutes last week indicated that we are likely to see at least another 2 interest rate rises, 25 basis points each. On the back of that, and coming into the end of financial year here, especially with regards to the ASX 200, we've seen approximately 4.5% sell-off from the key resistance of 7,400 level. But look, we'll go through the charts in a little moment. How about we actually go into the economic calendar for this week, see what are the driving headlines, and then perhaps get stuck into it and see where we are at the moment. So economic calendar is actually not as busy for the week ahead. We've got Bank of Canada Consumer Price Index, Canadian dollar in terms of the actual currencies, in terms of the commodity currencies was actually probably the best performer last week. Australian dollar dropped quite heavily, including the New Zealand dollar, and Canadian dollar actually did decently well. So we've got CPI data coming out of Canada. Canadian central bank is actually looking to do more rate rise as well over the next month or so. So that will probably be the key takeaway. On a local front here in Australia, we've got a huge news on Wednesday. We've got the monthly CPI data, and this is probably going to be one of the key headlines in terms of the actual next meeting for RBA and interest rate decision. So as we know, obviously for the last month, market overshot heavily and beat the expectations by miles, coming at 6.8%. Obviously, on the back of that, consumer discretionary spending and so on, consumer price index and whatnot, everything was shooting upwards, and therefore it seems like inflation was actually running quite hot. Labor market is actually quite hot as well here in Australia as well, and minimum wage increase actually by Fair Work Commission a few weeks ago, indicating that obviously we will have more pressure on inflation. So the only reason obviously to bring that down would be to what RBA is doing, lifting the rates, and this one on Wednesday will be quite important because majority of economists are expecting anywhere from 5.4% approximately to 6.8%. Anything in line or close to 6.8% will most likely add more pressure on Reserve Bank to actually lift another interest rate rise. And given the fact since May last year till this time now, we've had approximately 400 points in terms of the rate rises, it's likely that we might be getting another 25 basis points. If this was the case, obviously we could expect Aussie dollar to appreciate, and most likely for the ASX index or shares to actually depreciate. So that's a big one on Wednesday for everyone to watch. Also, we've got on Thursday, we've got retail sales coming out of Australia as well. So that's going to be an important one as well, especially if you're trading the ASX, and also if you are actually trading the Aussie against USD or any other major currency pairs. And lastly, one of the big ones is actually GDP data. So gross domestic product out of the US, previously sitting at 1.3% annualized, and the forecast is actually to come in line at 1.3%. Obviously, if you do see a number greater than 1.3%, then there will be further pressure from Jerome Powell and Fed to actually continue lifting the rates. So these are the key headlines. And lastly, on Friday, close to home, non-manufacturing PMI data that's coming out of China. A number above 50 will probably be solid for our Aussie dollar, and also the exporters as well. Some sectors probably in the share market, like energy and material sector. Anything below 50 will probably indicate that slowdown trajectory within China is actually continuing on, and they will most likely have to prop the market by obviously doing more monetary policy and dropping rates, which is what they've done last week, 0.1% or 10 basis points. So that's pretty much in terms of the news for the week. I mean, there is some other news as well from Great Britain, and GDP data, retail sales out of Germany, etc. But I won't go into it too much because my prime focus for today will be Aussie dollar, pound, and also I'll continue on a little bit longer on the ASX as well. So let's get stuck into it. I like to start off with US dollar index always, as you would probably imagine over the last few weeks. So what we're seeing at the moment is we're seeing a bit of dollar strength coming into the 50, 100, and 200-day exponential moving average. RSI is actually saying we are not oversold at the moment, and we can see a long-term downtrend line that's still active since September 2022. That's providing a big support and resistance at the moment, and it's probably more on an upside trajectory at the moment and hovering around that downtrend line, which is providing a bit of resistance. Any further news or strong inflation data out of the US, we could see US dollar strengthen and break above these levels and break above the downtrend line would obviously take us most likely towards that 105 level. Now, if you look at the levels where we are at the moment, and looking at the potential upside, we are looking approximately 2.3%. So that's something obviously to consider if you're a trader. I mention it every week. Risk reward and risk management is probably one of the key takeaways when actually trading. Now, if you're looking on the downside, because US dollar actually, at some point might get weakness, we might not get 50 basis points out of the, Fed, then we would be looking at that $100 level to provide that support level. So for me, I always like to start off on the US dollar versus all the major currency pairs because it gives me a good sentiment and indication of where we are at this point in time. So short-term uptrend over the last couple of days on the US dollar, but we are seeing a downtrend from May. So June has been quite bearish for US dollar, but break above the downtrend line and these key EMAs would probably add a little bit of strength and buyers come into play on US dollar. Obviously data dependent. Now let's actually go into the next chart. I'll quickly go through the ASX 200. So with regards to that, I did mention last week the 7,400 level was actually a big resistance level. I was kind of expecting the Fibonacci or retracement of around 50% off Fibonacci level from the major low. That's actually broken through at the moment. So it looks like we are actually testing the major low, which is from June 1st. Looks like we've actually lost all the gains for the month of June on ASX 200. which is obviously, if you are long, it is actually a little bit challenging, to be honest. But obviously, risk management and stop outs hopefully will helping you there. And now the question is, what is the potential downside if we see RBA lift 25 basis points? Well, the next level is key, and that is 7,000 level. So that would be the key support level for ASX. Otherwise, we could expect it to actually hover within this range between 7,000 and 7,400. So a downside and break below the actual low on June the 1st, it would be considered as a bearish move, and then 7,000 is actually a key support level. Break below these levels, we could see a hard sell-off into equities. Obviously, that would most likely be followed by DAX, FTSE, and maybe S&P and NASDAQ as well. And we could be in a bit of a free fall, to be honest, on ASX 200, because the next level of major support is not actually until 6,400 level. That level is actually provided a lot of support back in September 2022 and back in June 2022. On the contrary, if end of the financial year, selling and rebalancing books takes place this week, and we see in July actually, fresh upside on equities, then again, 7,400 is providing resistance. Break above that, obviously, we would be most likely marching towards that 7,600 level, and any break above that obviously would be taking out the all-time high and marching upwards. So that's pretty much on ASX. Going into Aussie USD, because a lot of our clients actually absolutely love trading all the majors because of the tight spreads and great execution. So, we've seen Aussie come off. Not a surprise, to be honest. The only reason why I say that is because RBA minutes actually came out last week. And given the fact that we've seen 2 interest rate rises in the month of June and month of May, the RBA minutes indicated there was actually quite a tight call. So apparently it was actually close to 50-50 whether they're going to lift the rates and keep them on hold. That obviously gave sellers some wind and basically supported them in their decision, because obviously AUDUSD touched that 68-cent resistance level, pushed through it for a couple of days, but hard selling came in and took effect, taking it to the range of between 66 and 68 cents, which has been actually on the horizon for the past 3 months, and we can see strong selling coming into play. Obviously, support level here would be around 66 or 65.5 cents. That would be obviously the key support. Break below that, if it takes out the major low, which is actually on the 31st of May, obviously all June profits would be taken out. Then we could see AUD/USD go all the way to 62 cents. Now, for us to see Aussie to continue and go down, take their prior low, major low, and go all the way downwards, we would basically need to see RBA kind of put the rates on hold for the next few months and no interest rate rises. To be honest, personally, I don't see that happening, because we do have a strong labor market, as I mentioned previously. We've got a strong inflation, actually, data going out. Minimum wages have actually increased as well by the Fair Work Commission, and therefore we are likely to actually see a lot more inflationary pain over the next few months. As a result, I expect Aussie to hover around these levels at the moment. Maybe at some point it will come back and retest that 68 cents, especially if we get 25 basis point interest rate rise in the month of July, and then maybe challenge that major peak that actually occurred on 16th of June. If it was to break these levels, then we could see a further upside all the way up to the next resistance, which is at around 71 cents. So that would be punchy 3.4% from that major peak, and it would be approximately, we would be looking at, just give me a moment, please. We would be looking at 6.87% upside from here. Again, the one thing, if I was a trader and I was trading the AUD, USD, and index markets, I would strongly be data dependent. I know I'm a very technical driven trader. Also, I take into account a lot of macro fundamental. Markets have been very rational over the past few months. It's been quite challenging, actually. And I believe the reason for that is because we are getting a lot of different data from from macro side of things. So obviously inflation, governments and banks, they actually all kind of having their own narrative and the way they go about it. So it will be all data dependent, and therefore, if you are a trader, it would be probably handy to actually take into account all this information when making your decision in terms of entering and exiting. So that's actually Aussie USD. And the last one that I would like to speak about at the moment is actually GBPUSD. Heavily traded pair here at 8cap. And what we're seeing is actually we're seeing very, very strong upside. So if you actually look at the charts all the way from the major lows back on 28th of September up until 16th of June, we're talking about 9 months of upside. So short, medium, long-term trend is up. It's broken through a major resistance level here at around 125 mark, and it's actually now hovering around that 127 level. Next resistance, by all means, $1.30. So that's actually a key resistance level for the pound. But nevertheless, given the strong upside from the most recent lows back in 26th of May, we might see a bit of retracement at these levels. It would be only natural to see after a strong upside, a bit of retracement. Now, the question is, how much can this pair retrace before it actually continues to go upwards? Well, generally speaking, I mentioned over the last few weeks, I like to apply Fibonacci levels. And Fibonacci level here indicates that 50% level here would be around $1.26 or 25.5 to 26 cents. So that would be the level of support. Also, if you apply the uptrend line from the major low in September, we can see that uptrend line is still valid. So we've still got a medium to long-term uptrend in play. And even if you see a bit of downside on GBPUSD, I would expect it probably to cluster with the natural level of support with the uptrend line, but also 50 basis point of the most recent Fibonacci retracement. So that would be also with regards to the actual support level. So we would have pretty much three things supporting pound against USD. Should we see a downside of approximately 1%. Now, if you can hold around these levels, and you can, buyers can come in and basically start purchasing pound on the back of, more interest rate rises in terms of the Bank of England raising rates another 1 full percent, then we could actually come back and retest that $1.30. Now, looking from these levels here, we're looking at around 2.25% upside. If you're looking for the actual downside to see how much you can retrace from here with the natural levels and everything that I've just mentioned previously, we're looking at approximately 1.8%. So the question is, obviously, it comes down to your trading rules. Break above that peak on 16th of June would most likely, give some confidence to the buyers and traders that are actually long to actually retest that $1.30. Nevertheless, any downside, as I mentioned previously, there is quite a bit of support with a 50% Fibonacci level, as well as natural level of support, as well as the uptrend line, which is providing support as well. So look, that's pretty much it at this point in time. This week, obviously, some decent news coming through. Next week is going to be a big one. There's quite a lot of news next week happening, especially from Fed. I guess what Fed is trying to do at this point in time is actually telegraph to the market what is unfolding, because if you have a look at the volatility index VIX, it's currently sitting at the 3.5-year low. So, it looks like actually there isn't as much liquidity in the market. A lot of smart money is actually sitting on the sidelines until we get a clear direction where we're heading over the next 6 to 12 months. A lot of talk about recession as well. But look, I would like to thank you for your time today. Let's monitor these trades and let's have a look what's happening on Wednesday. Otherwise, have a wonderful week. Happy trading, and we'll chat soon. Thank you.